when I look at Bitcoin, which the technicals have been better than anything else, when we break, below 30,000 consistently, 8,000 is the ultimate bottom. So I think we've got a lot more room to the downside, especially with the Fed being restrictive. And let's face it, most of these currencies they're not currencies, right? They're junk, right? I mean, the majority of crypto is garbage.
Wow. Welcome back, everybody, to Altcoin Daily. My name's Austin. That was, of course, heavily respected investor Scott Murad, who is the Global Chief Investment Officer at Guggenheim Partners. And just for some background, Guggenheim Partners is one of the biggest in the game. They are a global investment and advisory financial services firm that engages in investment banking, asset management, etc., with over $325 billion in assets under management. They are huge. So when somebody like Scott Murad speaks, investors tend to listen. In today's video, I want to have a very real discussion with you on where this price of Bitcoin, this crypto market, may be headed next. Now keep in mind, I'm not a financial advisor. I ultimately have no clue where the price of Bitcoin is headed next, and neither do you. And despite how bullish I am long-term, in the short term, we very may well have more downside to go, and in today's video, I want to share with you why. So, like always, check the timestamps down below, smash that like button, and let's jump in, starting with the broader global market. Because Scott Murad is not just picking on crypto. He expects more downside for traditional tech markets as well. And even though all markets have already dropped significantly, listen to this next quick 60-second clip of Scott Murad sharing his expectations for more traditional markets as we continue this year. Watch this.
So the wind's already come out of the sails of the tech world.
Right.
And more broadly, I mean, you could call it the broad indexes, but when you look specifically at this point, where do you see more pain? And to the extent that there's upside from here,
right,
for some stocks or some industries, they are what?
Right. Well, look, if you look at tech, I think tech is pretty fairly valued, but I see a lot more pain because markets...
Fairly valued, but you see more pain.
Right. Well, because markets typically don't bottom when they're fairly valued, right? Markets tend to overshoot. And when you have a day like we had on Friday with a heavy sell-off, which was a key reversal, which should tell us that, near term we're going to see a rally, but rallying off of a VIX that's at 30, I mean, historically we need to be north of 40, closer to 50 to get a real bottom. And so, I think that until we see some real panic, we're not going to have a real bottom. And, like I say, bear markets don't end at fair value. They tend to overshoot. So,
all right. Very reasonable analysis, I think. Give me your thoughts on what Scott just said on traditional markets down below. Do you agree? Do you disagree? But now let me play you this final clip on why Scott Murad says you'll probably regret buying altcoins in 2022. And to be clear, he is bullish on Bitcoin. He is bullish on Ethereum. Long term, he'll say this. He believes those two cryptos will make it through the bear, but he thinks the majority of other altcoins are trash. Watch this about 2-minute clip, and then stick around at the end. I want to share with you my thoughts. I want to give you my opinion. Watch this.
How do you think about the world of crypto? By the way, I don't know if we can get the camera's not going to see it. The blockchain house is here.
Right.
Every crypto person is in town here in Davos.
Right.
And we've watched it obviously tank. It's not clearly a hedge on inflation, at least thus far.
Right.
But do you see that as the tail? Do you see that as the dog? What's going on there?
I think it's more of a symptom. It's telling you, it's like the canary in the coal mine, right? We're seeing crypto collapse the way it is. I think it's got more downside to it.
More downside?
More downside.
How much more?
Well, when I look at Bitcoin, which the technicals have been better than anything else, when we break, below 30,000 consistently, 8,000 is the ultimate bottom. So I think we've got a lot more room to the downside, especially with the Fed being restrictive. And let's face it, most of these currencies they're not currencies, right? They're junk, right? I mean, the majority of crypto is garbage. So there are going to be survivors, but, and crypto is the future.
There's hundreds of cryptocurrencies.
19,000.
But do you think that Bitcoin is junk? Do you think that ETH is junk? Do you think Solana is junk? How do you...
I think Ethereum, I think Bitcoin will be survivors.
And survivors at one day at 100,000, 200,000, 500,000 in the sort of Kathy Woods world, or something else?
Yeah, it could be, but I don't think we've seen the dominant player in crypto yet. Right, this is like the internet bubble, right? If we were sitting here in the internet bubble, we would be talking about how Yahoo and America Online were the great winners, and everything else. We couldn't tell you if Amazon or Pets.com was going to be the winner, right? But of course, Yahoo. I mean, Google. We didn't have Google yet.
Right.
America Online, the dial-up service died. So we don't know these. I don't think we have had the right prototype yet for crypto.
Okay, what do you think? Well, let me share with you what I think, because some of this analysis from Scott Minerd I do agree with, but a lot of his analysis I disagree with. So let's break down what he just said point by point. Number one, I agree with Scott that I also don't think we should call all of these cryptocurrencies currencies, because they're not currencies. They're crypto assets. I don't want to spend my Bitcoin or Ethereum because they're going to go up in value. I want to spend my dirty fiat, get rid of that, and I'm going to hold these. They're investments for me. Now, it doesn't mean we should call them garbage. They're not garbage. Well, honestly, a lot are garbage, but the quality ones are crypto assets, and I do think that's a better name. Number two, and this closely follows number one, is Scott Minerd shares that he is a believer of Bitcoin. He thinks it is here to stay, but he also says, maybe it's the Yahoo or the MySpace of the internet bubble, and Bitcoin will be replaced by something more valuable. What Scott fails to realize is why Bitcoin's valuable. It's valuable because it's the most censorship resistant. It's the most decentralized, right? It's not fast, cheap digital payments. We had that before crypto, before 2009. Bitcoin's value is the most decentralized, the most censorship resistant, and this graph from Murad really illustrates where we are in the adoption cycle. The evolution of Bitcoin, or the evolution of any medium of exchange that may eventually turn into a full global money. It has to start as a collectible, or in Bitcoin's case, a digital collectible, right? BTC traded for years, for 1.5 years with no value, which, by the way, cannot be said for all those other altcoins. They all saw there's money to be made. These crypto assets are appreciating. After digital collectible, then an asset eventually gets to store value. Bitcoin is not there yet. We have to see greater liquidity, greater decentralization, education and understanding, as well as greater trust in the network. Again, we're getting there. We're not there yet. Every year the network grows, though, we do get more trust in the network. This will lead to greater price stability, less fluctuation and swings. Then, years later, we get a widespread medium of exchange, then even greater price stability, then convenient unit of account / full global money. So my point is, when Scott Minerd says, well, Bitcoin is probably the Yahoo or the MySpace, we don't really know what's going to be the clear winner a decade from now. I think that would only ever be right if you think another protocol, one of the other altcoins, is going to become more decentralized, more censorship resistant than Bitcoin, which is clearly not happening anytime soon. That's my thoughts. Give me your thoughts down below. And that brings us to our third point of Scott Minerd sharing that he thinks the crypto market and all markets have further downside to go. But first, I want to give a big shout out to sponsor of the channel, the FTX app. Now, you probably know the FTX app as one of the most respected, fully regulated exchanges in the US, with fees up to 85% cheaper than competitors and is trusted by millions of users. Now, there is a special promotion running right now. Get up to $100 in crypto for free with Altcoin Daily by using code Altcoin Daily when you sign up and/or this QR code right now. So, how do you do it? How do you get free crypto with Altcoin Daily? You are going to download the app, use our code, then fund your account to start trading, and then earn up to $100 in crypto. When you trade $100 or more, you'll earn $10. When you trade $500 or more, you'll earn $50 in crypto. And when you trade $1,000 or more, then you can earn $100 free in cryptocurrency. Get started today. There's a link down below. That's ftx.us/partners/altcoin daily. Take advantage, link down below. And that brings us to our third point of Scott Minerd sharing that he thinks the crypto market and all markets have further downside to go. In my opinion, I tend to agree with him. Not to say we won't see bounces in the process. For example, as discussed in yesterday's video, Bitcoin's making history right now on the weekly scale with its 1, 2, 3, 4, 5, 6, 7, 8th consecutive week to the downside, going on its 9th, even though we just started the week. So even in the most bearish of bear markets, a bounce will sometime eventually happen. And let's just say, all right, we go up, we bounce off, we go up, we bounce off, and maybe later this year, 3 months from now, we do break to the upside as more and more people accumulate Bitcoin. The trend is usually your friend, and the trend right now is Bitcoin dominance is rising. Bitcoin is sucking up market share, Bitcoin and ETH, but mainly Bitcoin, is sucking up market share from the rest of these altcoins. So for me personally, that's why I'm dollar cost averaging Bitcoin and Ethereum exclusively right now. I'd rather be a little late to the party than too early, but that's me. I'm more of a conservative investor in my mind. And last point I want to make, and I can see a lot of the audience being angry with me for saying this, but again, these are just my views in real time, and I use this channel to sort of document my mindset at the time. Let's just say, hypothetically, Bitcoin continues to grind back upwards over the next several weeks. Maybe we hit around 40, 41,000, prior support resistance in the past. That would be hugely positive steps for BTC. Do we think that more people, meaning new people, are then suddenly going to dive into alt, be onboarded into the network? Or do we think that retail is sort of done? They've sort of been turned off to altcoins because of the huge swings of volatility to the downside these last few months. I tend to think that the trend is your friend. And right now, the trend in terms of people being onboarded to the network, the majority of people, bought in around the top at the beginning of 2021. So there's a lot of people. We saw another significant amount of people, yet clearly slightly less people, get onboarded into the network at the second top back in November. And if we maybe approach again, I don't know. I don't really see a drove of new users coming into this network. That's me. That's my opinion. And again, on this channel, I'll always share with you both the bullish and the bearish narratives so you can form your own opinion. But the final thing I'll say is, number one, you'll never time the bottoms. I could be completely wrong. I can't see the future, but I know that I'll never time the bottoms. So I'm actively dollar cost averaging on the way down, much like you take profits on the way up, dollar cost average in on the way down. That's my strategy. And number two, what I think we need to see before new people, new participants enter this market is sort of a capitulation event, either in a correction or in time. So right now, or even if we, go up for a couple weeks, we're not really seeing the bulls, the buyers, step in at these prices in this market. So if we see a capitulation event, another leg lower, and we see the buyers come, we see that dip get bought up, that's a signal to me that the trend is starting to change. So number one, a price capitulation correction, or number two, just a time correction. A time correction if we stay around these prices for the next couple months. That sort of stabilization will be a bullish sign for me as well. All right, that is the video. My name's Austin. Like always, see you tomorrow. And by the way, I want to hear from you in the comments if you agreed or disagreed with my analysis of Guggenheim's Scott Menard's analysis. Let me know your thoughts down below.